Okay, so we've got a machine, book value of $980, depreciation is $60,000 per year on a straight line basis. So, set of independent situations follow. For each situation, prepare the journal entry for Marin to record the transaction. Remember, insured depreciation entries are recorded to update the machine's carrying amount. Can't stress that enough, you guys. People forget that all the time. And they use IFRS. Okay, let's look at the first one. A fire completely destroyed the machine on August 31st, 2020. And in accounting terms, that's called involuntary conversion. Just so you know, that sounds so much better than a fire. An insurance settlement of $429 was received for this casualty. Assume the settlement was received immediately. Okay? So what's the first thing we always have to do that I kept starring? Right? Because we're getting rid of something on August 31st, 2020. We're getting rid of an asset. And that asset has accumulated depreciation. And we assume the year end is December 31st. And that was the last time they updated it. Okay? So here's the last time they did depreciation. The first thing we have to do is update depreciation. So we debit depreciation expense, credit accumulated depreciation for how much? Well, they told us it was $60,000. And how many months have gone by this year? Well, if we count to the end of August, it's 8. Feel free to count on your fingers, you guys. So that works out to $40,000. Okay, so now we need to do the derecognition, or taking it off our books. So, I suggest leaving the space and trying to figure out. Okay, what's leaving? The machinery. Machine. So that is 1340. Okay? Now we also have to close accumulated depreciation. Is it still at 360? No, we've got another 40 there. So we're going to close accumulated depreciation for 360 plus 40. So that's 400,000. Now, are we getting any cash? Yep. 429. Okay, now look at it. Is it balanced? Nope. We are short debits, which means it's a loss on fire, or loss on conversion, or loss on derecognitions, like that. 511. Okay, now just hearkening back to what chapter? Was it chapter 10 on assets? If we want to figure out the loss or the gain, remember we took fair value minus carrying value. So if we consider the payout is the fair value, what it's actually worth today, which usually for insurance purposes, that's about right. 429, and our carrying value is 980,000 minus this 40,000. So our loss is 511. And again, you guys, filling in the blank will always work. Okay, so that was an involuntary conversion you learned how to do. Now we're going to sell it. So now we go back to the original information and we're going to do part B. So keep this handy. Okay. On April 1st, 2020, Marin sold the machine for $1.043 million to Cullenber Company. Now, remember, we had to decide if it was monetary or not. Is this one monetary? Yes. So we can record everything just like normal. So, first thing, update depreciation. So, this time it's April 1st. So we're going to debit depreciation expense, credit accumulated depreciation. And that's going to be 60,000 times how many months have gone by to April 1st? 3. So it's 15,000. So now, try doing the actual sale. And then come back. So I'm leaving some debits, I'm leaving some credits. The machine's leaving again for 1,340 million. We have to close accumulated depreciation. Now it says it was 360, but we just added 15,000 to it. So that's going to be 375. We got some cash. 1,043,000. Are we short debits or credits? Well, we're short credits for 78,000, and that's a gain on sale. Okay, so hopefully that makes sense. So now let's look at a third scenario. On July 31st, the company donated the machine. And if you look back to the last bullet point on page 10, if it's donated to an organization outside the reporting entity, the donation is reported at fair value. So, donations are very different. Okay, and Dartmouth City Council, that's not us, they're not even related, so we're good. The fair value at the time of donation was 1.1 million. So then you think, ooh, donation, well, I'll go right to the entry, but what's the first thing you have to do? Appreciation. Debit, depreciation expense, credit, accumulated depreciation. For 60,000 times how many months have gone by? 7/12. Again, count on your fingers. 2. Okay, and now what do we do? Record the donation. So remember, we're not getting anything for it except, so we're going to put it as an expense, which will lower our net income, and based on tax rules, hopefully lower our taxes. So put it on pause and try and put your entry together. So again, we're getting rid of machinery for 1.34 million. We're closing accumulated depreciation. This time it's 360 plus 35,000. So 395,000. Then we debit a donation or contribution for the fair value. And are we short debits or credits? Well, we're short credits for 155. And so we have a gain on donation. Okay, so now you've learned how to do a donation. And in 410, you'll learn how to do it from the nonprofit side when you get a donation. Okay, so would the treatment of A to C differ if the company were using ASPE instead of IFRS? No. But the depreciation calculation might be different. That's all. Everything else is treated the same way. Okay, so that's just selling an asset, getting rid of it, how to calculate it. You've already done more complex ones in earlier chapters, so this will be a nice way to end the course with something you're familiar with. Okay then, last page. You can just read, analyze a company's investments. It's not too big of a deal. Okay, here's the suggested problems. This 11.4 says A to E. I've repeated it here, okay? Straight line, units of production, working hours, double declining. I think they had some of the year's digits. If you know this stuff already and want to look at another neat little one, you can look at some of the year's digits. But these are the four I really care about. Okay, so I think I've got everything you need for Wiley Plus and all the notes. So that is it for Chapter 11, this course. I will put up my filled in notes for Chapter 12 tomorrow, but it is not on the exam. We just ran out of time with this on. Okay, so take care, and yeah, good luck studying. Bye.